Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my market insights for Friday, February 19th. Well, the year has started out pretty badly, with the S&P 500 index down nearly 11% at one point, but since then it's recovered about 40% of the losses in just 5 business days. So are we seeing a return of risk-seeking? In fact, many of the factors that were weighing on the markets earlier in the year have been stopped or even reversed. Foremost of these is China, where the authorities offered more measures to support the economy and boosted the currency. The fact that lending soared in January was also significant, as it holds out the promise of at least a stable economy. Although one wonders if prolonging a debt-fueled expansion is really in the country's best interest over the longer term. A slight rise in inflation there in January is also a positive. Here in Europe, ECB President Draghi has reassured the markets that the ECB will do more in March, and even Bank of England Uber hawk Ian McCafferty has turned into a dove. Now, recent comments by most Fed officials give the impression, too, that they're in no rush to hike rates anytime soon either. The impact has already been felt in the bellwether commodity sector, where prices of many growth-sensitive commodities have risen slightly, or at least stabilized after a prolonged period of declines. Brent oil, for example, is 25% off its recent lows, while copper is up 5.7% from the bottom. Against this background, FX traders may want to put on some carry trades, taking advantage of the low interest rates among the buyers of commodities and the higher interest rates among the sellers. Going long the South African rand, Mexican peso, New Zealand dollar, or the Australian dollar, and financing it with the safe haven yen or Swiss franc, or the low interest rate euro would seem to be one way to take advantage of this trend, if you think it's likely to persist. The Turkish lira has the highest deposit rates among the readily available currencies, but given the geopolitical problems surrounding Turkey right now, its currency is likely to be subject to other forces. Now, the ruble is a strong oil play that also has high rates. Market participants who expect that oil will even stabilize should consider that currency too. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.